105.7 Light FM, the eye of the tiger. That's Survivor. My name is Morning Dave. Good morning, all. We're at 8:40 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And Legal Beagle means the man of the moment is back with us to check in and find out what's going on Wall Street this morning. Philip Statler on the line from Statler Financial Services in downtown Sebring. Welcome back, Philip. Good to hear your voice.
Hey, man, good to see you as well. It is had a nice week cruising and just getting some downtime after tax time, and good to be back in the office though, and time to to kind of hit it hard and see what's happening in the economic world right now.
Absolutely. I mean, there's the old Wall Street dictum of sell in May and go away. And with world events as it is, I don't think we're going to have a sell in May and go away May, are we?
I would not think so, based on, all the geopolitical stuff going on right now. It's a lot of stuff to talk about.
Without a doubt. Back us up to yesterday in order to tell you what went on. Yesterday morning, I was not particularly optimistic after the ceasefire negotiations kind of fell through, and President Trump said that the ceasefire in the Iranian conflict is quote-unquote on life support. But once again, the markets evidently really didn't give a fig, and we traded up. The Dow was up by 95 points. Standard & Poor's, another new record, 13.9 points up. We start the morning out at 74.1284, and NASDAQ up another 27 points. Again, another new closing record, I think, 26.274.13. We don't really seem to be as worried about the shooting war as we probably should be, are we?
Well, yeah, it doesn't look that way. I mean, obviously it's one good day, maybe two good days, and then we have a rough day thrown in there. But I thought yesterday was going to be a down day. I mean, it was down most of the day until early afternoon. Maybe it started to flip.
Pretty close to that. I mean, my charts are showing about 11 o'clock we started an upward trend, and by the time we were up to about noon or so, we were finally in positive territory. And looking at the NASDAQ at this point, I think the Dow and the S&P probably followed the turf. It's kind of interesting. The thing I've been noting is that there's always something that's hot and something that's cold in the tech markets, NASDAQ being the biggest percentage mover, over the last week or so. All of a sudden now they've noticed that the chip stocks are going crazy because everybody's hacked off at the Magnificent Seven spending so much on CapEx. Oh, that means they're spending money with the chip companies. So suddenly the chip companies are going crazy while Microsoft and the rest of the Magnificent Seven are getting beat up. NASDAQ is starting to look like 1999 all over again, and I take that from a Goldman Sachs piece that came out yesterday.
Yeah, I saw that headline as well. I will say that right now it is looking like the NASDAQ's going to open down more than 1% this morning at the start. So it is going to be a red start, it looks like, across all the indexes.
I think we'll call that profit-taking or maybe a dose of sanity down the line. We start the morning out with something that's profoundly bad for most stocks, and that's our inflation reading. Consumer Price Index from the government, annualized rate off of the April report, up 3.8% on the CPI. And I must make note, that's a 3-year high for inflation. We knew it was going to come home to roost eventually, and yipper, it did. And the core is up. We're starting to bump our nose on 3% there, too. It's at 2.8% annualized. Even once you get rid of the gas and food prices we've all been whining about, the stuff that goes up and sticks, that's up 2.8%. I can't think of anything good out of that report. Can you?
No, absolutely not. And of course, they're blaming a lot on gas. Fuel costs have gone up substantially, but still, to be the highest number we've seen in 3 years, a 0.5% increase from the last reading last month. That's a huge increase, Dave. I mean, if you take that and extrapolate out, that's 6%.
Oh yeah, it's nice to blame it on fuel, but when you pull out fuel and food, that produces the core number. The core percentage is, number one, it's up from last month. Number two, 2.8% is El Stinko. So, like I said, the core is the stuff that ratchets up and doesn't go down, which is profoundly bad news from an inflation standpoint. I've got to believe that's probably contributing to the NASDAQ futures just a tiny little bit, wouldn't you think?
I would definitely think so. Crude oil's not helping either, back up over 101.
Yep.
And I got to think, Dave, as we look at this, and a new Fed president coming in, I just don't see any way to reduce interest rates given what I'm seeing right now.
And it's going to be an interesting Federal Reserve Open Market Committee. Powell is going to stay on after Friday when his term as chairman actually ends, which means he's going to be a fly in the ointment of President Trump's chosen successor, assuming the Senate gets around to confirming him this week.
Yeah, exactly. So we'll see how that plays out, but it's not looking good for interest rate decreases.
Offhand, I would think the odds are. I think I had 95%, something like that. Nothing was going to happen, but the minor league odds that I got off of a report at the end of the week last week was that the odds right now are better for an increase than they are for a decrease. Now the consensus is almost a lead pipe cinch. No rate changes for the rest of the year. But if you take the minority viewpoint, more people are betting on an increase than are betting on a decrease right now. That's kind of a
Dave. I'm looking at interest rates right now. I haven't really clicked over and checked the Treasury rates lately, but man, the 30-year hit 5%.
And the 10-year has been going up consistently as well. It's not good. And you mentioned the price of oil. That's what we crossed one of those psychological barriers this morning. Crossed 95. We kind of shrugged last week, but then got up to the 100, got past 100, and that does tend to scare the big stocks, especially the travel stocks.
Exactly, because not just that, but even like trucking companies and stuff like that, that's a huge deal.
Absolutely. So pretty much where we're at today is where we were at yesterday as far as the Iran situation. President Trump saber rattling, saying that the ceasefire is on life support. We're still blockading the Iranian ports. Iran keeps talking about how their offer almost boils down to U.S. surrender on the thing. And absolutely nobody's doing anything, and the markets are responding accordingly, not knowing what's going on next. There are a few reports out, though, as earnings season kind of starts to wind down just a tiny little bit. Under Armour has been up and down for the last few quarters. How did they do last quarter?
So it's another down quarter for them. They lost 3 cents a share, and you would think that's not bad compared to they were expected to lose 2 cents a share anyway. But that's put some pressure on them. And I guess the big miss is they missed on revenue substantially. I'm talking about $500 million miss when it comes to revenue. So that was a substantial miss on revenue. They're down a little over 15.5% this morning.
I guess the athletic sponsorships they spend money are going to have to end up taking hand-me-downs for a while, huh?
It's not looking good. A couple tidbits. I do have some more earnings, but 2 tidbits I want to mention. We talked a little bit, I think, a couple weeks ago about GameStop going to try to buy eBay. They made a $56 billion bid to take over eBay. eBay turned it down, saying that they are not really sure that they can come up with the financing to do that deal. So that scrap that deal. I'm sure eBay is going to come back with something else. On another note, Wendy's. There's news out there that's floating that there is a private equity fund that is looking to buy Wendy's and take it private. And so that has Wendy's trading up like 15% this morning.
They're famous for their social media posts. I wonder what the company's saying on Facebook about that rumor.
We shall see. I got 2 more for you that I think we know. On Holdings. Now, On Holdings is the fancy running shoes that has all the little holes in them. So they're very popular when it comes to running, and so they reported first quarter earnings and revenue that beat expectations. They even reiterated their full year net sales growth outlook, and increased their earnings. But for some reason, that wasn't enough today. They're trading down 4.2% before we get going this morning. And the last one I want to leave you with is Zoom Information Technologies. Tumbled this morning substantially as their revenue guidance kind of is off what expectations were. They're down like 32%. Yeah, and so they are trading down. This is the intelligent platform. This is not Zoom, the meeting platform.
Okay.
So yeah, so it's a little bit different there. And so then, so that's kind of where we are today, Dave. And as I said, looking at the beginning of the morning, it looks like we're going to be trading down.
Absolutely. What do the futures look like so far? We've got no good news that we got on the reports or in the economy right now.
Well, let me refresh. There we go. Actually, it has improved somewhat on the Dow and the S&P 500. The S&P 500 right now is almost flat. They're down $1.30. I mean, $6.30. The S&P 500 is down 1/4 point, and the NASDAQ 100 is down 3/4 point. So some things there to look at. On the other side of the commodities coin, we've got silver down 0.7%, but still trading relatively high at $85.37 an ounce. Gold's down 1/4% at $4,718 an ounce. Crude oil up 2.75% at $100.78 a barrel right now.
If it dips under 100, we might see a rally in the equities market. But when it's when it's over 100, that psychological value just kicks people where it hurts. Overseas markets are looking real cynical this morning. On the Asian rim, everything was in red ink. Mainland Chinese markets down on average by about 1/3%. Europe is looking at the price of oil and inventing new four-letter words. The average European index is down almost 0.8% halfway through the European trading day, too. That $100 a barrel magic number does make a difference. If I was going to try to figure out how to retire anytime soon, days like this are why I need professional advice. How do I find you to get a plan to retire properly?
Devin, give us a call at 863-382-0037. Planning is important. And if you have a plan, it gives you more confidence when you head into retirement. So give us a call. Let's spend 30 minutes and see if you're on the right track to the retirement you always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back here again tomorrow morning about the same time. You have a good day, my friend. I appreciate it.
All right, buddy. You take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Folks, again, I want to thank you for joining us today. I hope your week is going well. Join us again tomorrow. Take care. Bye now.